Hello, my fellow investors. Here's a stock, Tyson Foods. It's a very big American food company, and it's beef and chicken and pork. And lately, it's gone down pretty significantly. You can see over here, in its height was close to $100, and now it's trading at $60, $61. I just did a quick checkup to see if there's anything interesting in this company and if I'm interested in investing in it. So let me just give you a little bit data background before I start digging into deeper numbers. So what's Tyson Foods? Whoever doesn't know, Tyson Foods, they have a lot of brands, and they're pretty famous brands. So without doing any digging deeper, it seems to be a pretty strong moat. Um, these very famous brands, hot dogs and all different kind of meat products. So let's say, assuming the moat is pretty good, is this company worth investing? So it's always I always like to categorize all my investing. Is it a cigar butt? Is it a good company at a great price, an amazing price, or is it a great amazing company at a fair price? So Tyson Foods isn't an amazing company. It's a maybe you can say a good company, a great company at a fair price. Maybe it's always worth to buy it. But as of now, I'm not interested in investing in this company. If I'm looking to buy this company for the long term, for 10, 20, 30 years, I'm not interested. If I go to very low PEs, then maybe there's something else. But let me just show you what I did over here. So this is for 2022, the 10K. The sales is $53 billion. The net income was $3.2 billion. I'm just going to show you what I did over here. I went through all different data going back to 1989. I'm going to show you soon all the data I put inside in a spreadsheet, and I'll show you why I'm not interested in this company. I just went through all this data and I took a few metrics, and I said I'll see what's the company's compound growth in the past 30, 20, 10 years in different time frames, and we'll see how good is this company? Is it worth it? So let's start here from 2022. Why is it interesting? I'm not making videos about companies that aren't interesting. Why I'm not interested? Companies that seem to be interesting, and then I say why I'm not interested. So here, 2022, as you can see over here, the net income per share. The net income per share, so it was $8.92. So let's say around $9, and right now it's trading at around $61. It's a P of around 7. A good company with a pretty good moat at a P of 7 sounds interesting. And another thing, as you can see over here, this is also the 2022 10K, the book value per share. I didn't do any checking up if it's right or wrong, but this is what the company is saying, $55. So the company is trading very close to book value at a P of 7. So it looks interesting. A company that has 50 years and a pretty big moat. It's the biggest meat company in America by sales. It definitely sounds interesting. So why am I not interested? So I put here all the numbers. What I did was like this. I took the numbers 1989, 1990, 1993. I put in just took a few metrics, and then I did the compounding. How much did the company compound in the past, and all these different metrics. So I just took the top line, the sales. 1989 was 2.5 billion, 1993 3.8 billion, 1993 4.7 billion, 2001 10.7 billion, 24, 28, 42, and 53 billion. Net revenue. So 1989 is $100 million, 120, 180, 88, and 2022 is $3.2 billion. Book value per share in 231, 324. You can see all the numbers, $54 as of 2022. And then total assets. That's another thing. I just want to see how much is the company's assets. Another good thing about Tyson Foods is that let me show it to you. The ratio of the debt to equity is amazing. It's absolutely amazing. Let me show it to you over here. Over here you can see here the total assets is $36 billion, and the total liabilities, the current liability is 5.3, another debt of 8. How much does it come together? 5, 12, 13, 15, 16, $17 billion maybe, a rough estimate. at $36 billion in assets and $17 billion in liabilities, it's a very good ratio. So I just took the total assets of the company in all these different years without checking the net assets, just the total assets, to see how much the company grew in the past 30, 20, 10 years. And then I just took a random stock price. A lot of times before I do any deep digging, I like to see, okay, everything looks very nice. Let's see, actually, if I would have invested in the company 30 years ago, how much would have I earned the past 10, 20, 30 years? It's not a real way to value a company. The stock price doesn't mean anything, but sometimes you just want to see, okay, everything sounds very nice. Does it actually work? Did it work in the past 20 years? And sometimes you could say, wait, if everything is right, then why in the past 30 years the company went up only, I don't know, 10, 20, 30%, whatever it is. It's just a nice way to check things if you're right or wrong. So the way I just took the stock price, I just went to Yahoo Finance. I went like to the first date of the year. I went to 2022. I looked, I just went here. Okay, this is like the beginning of 2022. Okay, $91, whatever. I didn't do anything specific. Just took a random stock price more or less at the beginning of the year. Okay, so let's see the numbers, the actual numbers. If I do the compound growth of the sales from 1989 to 2022, which is 34 years, then the compound growth was 9.36%. From 1993 to 2022, 8.4%. And net revenue. So from 1989 to 2022, 10.76%. And from 1993 to 22, 9.3%. So you can see more or less, if you take the past 34 years, the sales are compounding at around 8.5% to 9.5%. Net revenue was around 9.5% to 10.5%. Not bad at all. 10%, a company that's compounding at 10% is not bad at all. And book value per share also you can see. From 1999 to 2022, 9.7%. And over here in 30 years, 7.5%. Total assets, 6.3% in 34 years, 8.4%. You can see more or less the company, the sales, the net revenue, it's around 9.5%, 8.5%, 9.5%, 10%. And the stock yield, if I would have bought it in the beginning of 1989, and it would have been 7.3% in 34 years, and this is without dividends. So with dividends, it would have been much more. Not very much more. They don't have a very high dividend, but 7.3% without dividends. With dividends, it would be even more. And in 30 years, in 1993 to 2022, is 4.8%. Again, it doesn't mean anything. Now, I take 21 years. I took from 1990 to 2010. Now, the reason I did 2010 and now 2009, because it's not fair. 2009 was a financial crisis, so it wouldn't be fair to take 20 years and exactly finish it in a year that's a very bad year. So I did it 2010, which will be 21 years. So sales, 10%, net revenue, 9.3%, book value per share, 7.13%, total assets, 7.90%, stock yield without dividends, 3.8%. 2003 to 2022, the past 20 years. Sales, 3.9%. That's the last 20 years, which would be the most. Who cares what happened 40 years ago? The last 20 years, the sales grew at 4%. But net revenue, almost 12%, much better. And okay, we always take into consideration 2022, after the COVID, everything, numbers are a little bit mixed up. But more or less, it's a pretty fair, when we could take 30 years back, 20 years back, take a few different time frames, and it will give us more or less a pretty, how would you say it, a pretty correct view of the company, more or less. If you take 5, 6 different metrics and you take it in a few different time frames of 20, 30, 40 years, 10 years, and you do a few of them, then you get more or less a pretty good frame, a pretty good view of the company. So in the past 20 years, net revenue is 12%, book value 8.18%, total assets 6.4%. Okay, stock yield doesn't mean anything, 10%. 2001, 2010, 10 years. So sales 10%, net revenue 24%. Again, it's exactly from after a bubble to after another bubble, after another crash. So again, it doesn't really mean it's 2001, 2010 is a little bit of a problematic time frame. Book value 3.6%, total assets 0.1%, and stock yield 1%. 2010, 2019, the past 10 years, sales 4%, net revenue 10%, book value 10%, 11%, total assets 12%, and stock yield was almost 16%. So if I want to buy this company, let's say, okay, let's 10, 20, 30 years ahead, doesn't appeal to me a 10% yield compounding. To compound a 10%, specifically, I'm looking for 15, 20%. If there are investors who have no problem with 10%, they say, okay, maybe this company is a great company. trading almost a book value at a PE of 7, and it seems to have, I didn't do any deep research, but it seems to be a pretty solid company that's worth checking into. If someone's good with 10% compounding rate, okay, it will seem to be a pretty interesting investment. For me, a company that's more or less compounding at 10%, all these different metrics, in all these different time frames, I'm not interested in it. Now, if the company the stock price would really go down to P of 1 or 2, we're talking about $20, $30 per share, then that could be very interesting. Then we're talking about doing not investing in the company for the next 10, 20, 30 years, but if you could buy a good company at a P of 1 or 2, and you can make an easy 10 bagger in a few years, that's something else. But as of now, at a P of 7, trading close to a little bit over book value, 10% over book value, for me, I'm not interested in this company as of now. If it goes down to $30, $20, that'd be very, very interesting and worth doing a deeper research into the company. Thank you very much, and hope you enjoyed this video. Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.